This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus agreed on Saturday to raise production by 548,000 barrels per day in August, further accelerating output increases at its first meeting since oil prices jumped, and then retreated, following Israeli and U.S. attacks on Iran. The group, which pumps about half of the world's oil, has been curtailing production since 2022 to support the market. But it has reversed course this year to regain market share, and as U.S. President Donald Trump demanded the group pump more to help keep gasoline prices lower. The production boost will come from 8 members of the group: Saudi Arabia, Russia, the UAE, Kuwait, Oman, Iraq, Kazakhstan and Algeria. The 8 started to unwind their most recent layer of cuts of 2.2 million barrels of oil per day in April.
Low global oil stockpiles were a major motivating factor in prompting OPEC Plus members to raise production by 548,000 barrels per day in August at the group's meeting on Saturday, the Russian government said in a statement. The group, which pumps about half of the world's oil, has been curtailing production since 2022 to support the market. But it has reversed course this year to regain market share, and as US President Donald Trump demanded the group pumped more to help keep gasoline prices lower. Taking into account the robust global economic outlook and current market conditions reflected in low oil inventories, they, 8 OPEC Plus members, agreed to make a production adjustment of 548,000 barrels per day in August 2025, the Russian government said.
Moving on to the top news in the energy sector.
Discounts for Russia's flagship Urals crude oil for delivery to Indian ports in August shrank to their narrowest levels since 2022 amid high demand and shrinking spot supply, free traders in the grades market said on Friday. Narrowing discounts and lower supply of spot Russian barrels will push Indian refiners to look for alternative oil like United Arab Emirates Murban or US West Texas Intermediate, WTI, grades, traders said. The narrowing discount shows how Moscow is managing to keep its oil sales up despite Western sanctions, while its discounted oil is getting more expensive than before, though still cheaper than alternatives.
Advocates of clean energy on Thursday decried the final passage of President Donald Trump's tax cut bill by the House of Representatives as a reversal of course on the energy transition, while fossil fuel interests rejoiced. Trump's fellow Republicans in the House passed the bill 218 to 214, and it now heads to the president's desk. Trump is expected to sign it on Friday. The legislation sharply cuts access to a 30% tax credit for solar and wind power projects that had been set to run until 2032 and which developers had relied on. Next, we have the top news in metal markets. U.S. President Donald Trump on Friday said he had signed letters to 12 countries outlining the various tariff levels they would face on their good imported into the United States. Trump told reporters aboard Air Force One that the letters would be sent out on Monday. He declined to say which countries would be in the first batch of letters. Trump had told reporters earlier on Friday that he expected letters to go to most countries by July 9, when higher, reciprocal tariffs that he paused for 90 days are due to go into effect.
Canada has discussed offering financial support to large aluminum producers like Rio Tinto impacted by a US-led trade war, in the event that Washington's 50% tariff on imports of the metal persist in the medium term, the CEO of a key industry trade group said on Saturday. Aluminium Association of Canada CEO Jean Simard told Reuters in an interview that the early talks could help the sector in the event that Ottawa is unable to reach a planned deal with its key trading partner by July 21. It's part of a larger discussion where everything is on the table, Simard said, adding that no decision has been reached.
We will now look at the top news in the agricultural sector.
The European Union will cut imports of Ukrainian wheat and sugar by up to 80% to address the concerns of its farmers, according to quotas announced on Friday, that are likely to drive Ukraine growers to sell more to markets in Asia and Africa. In a show of solidarity following the start of the Ukraine war in 2022, the EU opened up its food markets and temporarily waived duties and quotas. But as farmers across the bloc protested against a flood of cereals, sugar and poultry from Ukraine, Brussels moved to reintroduce the quotas.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.